Hey, good morning, Mr. Grider. How are you, sir?
Great, Albert. Heading up to wild card weekend. We're going to get an
Right?
unemployment report, kind of the first one tomorrow. Um, but man, this year is kind of exciting to see, right? As we start out. So I think I think this is really great as we're looking at this and what a topic on here, right? Where do we go from here? A year or two ago, we're talking about date the rate, marry the house, right?
Yeah,
Man, what a dating period we
yeah,
had.
a
You're on a
long
long,
period.
Yeah, it's a long
that's a
engagement.
long date,
Yep.
right?
It's a long engagement.
Long engagement, right? But, here it is, right? Here we are in 2026. So, thank everybody for attending. And Albert, I think we should just go and see what we can cover here today, right?
Absolutely, absolutely. So, first of all, thank you everyone for attending again another webinar. It's our first one of 2026. We're glad to have you here with us today. So, 2026, where do we go from here? Right? It's where we're starting out with what are we doing? Right?
A
Where do we
blank
go? Right?
slate.
Yeah, exactly. Where do we go from here? So, with that being said, we always want to thank you for your participation. So, who are our panelists today? Well, we have Mr. David Grider, who is our Senior Vice President of Sales here at Home Express, myself, Albert Martinez, who is your corporate trainer here at Home Express, and our special guest is one of our leaders from the Western Division, Vice President of Sales out of the West, and that's Mr. Greg Fairman. So, with that, Mr. Grider, I hand it off to you, sir.
No, great, great. So thank you for attending. I started looking back. We did these webinars now for 5 years, right? And some of them are more forward facing, right? Hey, here's our programs, here's how great our service is, there's some new things. And then kind of this one's a little bit different. Just trying to look at some trends and what we're seeing at historically, and we'll try to kind of get a plan for what we're going to do in 2026 and hopefully provide some information for you regarding that so you can kind of do your own research as well and kind of see how I can help our customers in your community, and we're just trying to provide some value with that as we go through this. And again, some of these slides and some of this economic data, so it's on a national level. And trust me, I've looked at different MSAs and different, neighborhoods within those neighborhoods. They're different, right? That's where your expertise comes in. So thank you all for being in this industry and going through the last few years we had. And it would kind of be interesting to kind of see some of these slides of just uh, how you guys are weathering the storm through the cycles, right? And it's terrific, and I congratulate you all that. So we'll go through kind of the agenda here today on the next slide. We're just going to look at a lot of economic data. Then we'll look at some best practices on that, and then talk about non-QM, maybe some expanded programs. That looks like a long list. Now, everybody who registers is going to get a copy of this deck and recording. So if you can't see it, there's some things on there got a little bit smaller. But this way, you'll have some data that hopefully you can use and utilize going into this year to add value to your customers. The next slide, and this is one that I thought we'd have a poll question. As you look at forecasting for 2026, Albert, three ways we can go, right? We can go down some, we can stay flat, or the mortgage market and house market going to go up. So, what do you guys think, right? So Albert, I
Yeah,
think we should do a poll on
that's
this.
it. We have that poll live, right? What do you think will happen to the total loan volume in 2026? It'll go down, it'll stay the same, it'll go up. What say you? So we
I'm
get
hoping it's the green arrow,
That's
but
right.
man, I'm looking at it. I probably stay the same. That'd be my guess, right? I think most people would do that. But if you're in a different MSA or different community, it could be going up in your area, or it could be going down in your area. So I think it's
absolutely.
relative where you're at.
Well, the masses have spoken, Mr. Grider. They all think it's going to go up.
Dude, I love it, man. We're positive. You're my
Right, there you
type of
go.
people, right? Absolutely.
Glass
And
half
it
full.
absolutely could. All right. And so these are just looking at trends, right? So I love the positivity, and I do think there's sectors of our mortgage market that's going to go up, and that's probably at the end here. So let's go to the next slide and just look at kind of Greg, I'm gonna let you talk about this. You talked about this with me the last couple of days of the amount of MLOs that were in our industry in 21 to what it is today. So Greg, why don't you kind of take a look at this, kind of give them some numbers here, because I think it's just fantastic for those that are on this call today.
Absolutely. Thanks, Dave. Yeah, it's staggering when you really think about it. The people on the call, the MLOs on the call really should be celebrated and congratulated for sticking through this market. I mean, in 2022 is the peak. 620,000 people were registered MLOs, and the beginning of last year, 2025, it went down as low as 193,000 people. I mean, it's easy to do loans when the rates are at 2.5%, 3%. In the last 3 or 4 years have definitely been more indicative of a real estate cycle. Rates go up, go down, markets change. The people that are sticking through it now are true professionals, and they're really in it for the right reasons. They're certainly in it to help their clients and their referral partners and to do a good job. So congratulations on if you're sticking through the mortgage market, because this isn't easy, and you've weathered some storms the last 3 or 4 years, and certainly should be celebrated. So congratulations.
Yeah, no, I can't. My sentiment's the same way. It's like been doing this. I'll call it for 20 plus years, even though it's closer to 35. And I've seen all the cycles, and those that stick through it actually really excel when the cycle turns because
Absolutely.
they have the fundamentals in place. And so we'll talk a little bit about fundamentals of what you can do every day as well. So let's go into look at some forecasts here. And again, a lot of forecasts are forward facing, saying, hey, it's going to be this great, or some that might be naysayers, right? So first, I'll just talk a little about MBA forecast. They're expecting it to grow 8% to 2.2 trillion, which is okay. That would be significant in that. Um, the kind of the breakout is more towards a refinance. I think everybody thinks they're going to have times where the rates are more favorable for refinance, and I do think I've seen that, right, Greg? I've looking at the applications and the fundings that we've done over the last 60, 90 days. I think that we had a increase as a percentage of that mix on the refinance. Have you seen that in the West Division as well?
Absolutely. Certainly more cash out refinances, people, releasing their equity. It's a great position to be in to have the equity. And whether it's a debt consolidation, taking money out for college or a wedding, or actually, adding to a real estate portfolio, people are certainly just putting their equity to work, which is great. That's part of the mortgage industry and cycle is cash out refinances. And, certainly the last, 60, 90 days, we've seen an influx of those, which is fantastic. It's indicative of a healthier market.
Absolutely. On the next slide, I'm going to have, and it's going to be very small print, but I want you to have this as a copy of the deck. Kind of goes through the MBA mortgage finance forecast, and you kind of see where 2025 we did a little over 2 trillion. Estimated there because the last month hasn't been calculated or last quarter in full has not. 2026 about 2.2 trillion, and then it breaks it out per quarter, right? As you've been at the beginning of the year, it's not quite purchase season is, but you'll see some purchases in that as it goes in that, and I do think comes March, April, May. We'll see what the new administration we have now, picking a new Fed chairman. Things could happen very favorable for us, which I'm hoping, right? We could use a little bit more in that. But just because the Fed funds rates goes down, doesn't always mean it translates into the mortgage market. It's more on the bond side. So kind of keep on that. And the spreads do matter on the AAA bonds. So keep that in mind. So how forward facing are they, right? How we are. But you got to have a plan somewhere. And I actually don't mind when they go through this and say, hey, it's going to be way better than it actually turns out because you got to just go on what you see on trends now, right? And what you kind of anticipate going in the future. But I wanted to kind of share this article is from October 28th, 2024, and they're expecting the mortgage growth to grow by 28% in 2025. Right, so they're expecting 2.3 trillion. Back down, it was an increase, but not to that extent. We ended up just over 2 trillion. But you have to have a plan. So this is kind of where we go into what's the trend. The trend is slight increases, right? That's what we've seen from 24, 25, and now the NBA kind of forecasted this just a little bit, some growth, but not into 28% growth. The next slide we have, some rates, and I'll have Greg talk a little bit about the rate forecast as we go in, and we're looking at charts how housing sales and that are related to the rates as indication. But looking at this, Greg, it looks like got pretty good small band here of what the predictions are going to be.
Yeah, absolutely. I mean, I kind of look at it, consider this the dartboard slide, if you will, right? Everybody's kind of throwing a dart to see where it's going to be. Different opinions. Fannie Mae saying 5.9, mortgage bankers saying 6.5, home builders say 6.25. The range is probably going to end up being low sixes, down to mid fives as far as the range of interest rates this year. Probably gets closer to the lower sixes. Which is great. You're certainly going to have some opportunities throughout the year due to economic influence or global influences where the rates will go lower than that. You might get it down to the low fives, for certain snapshot periods of time, which would be, it's an opportunity, right? That'll be a little bit, might get a refi rally going, might afford some people to buy a little more home or actually get into the purchase market. So it's great. It's all part of a real estate cycle. It goes up, it goes down. Probably at the end of the day, it's low sixes, high fives for the interest rate, which gets everything back to more of a normalized market, which is great, which is what we need, something a little more predictable. Predictability is fantastic when you're talking about the housing market because people are able to budget and kind of forecast out what they're going to do for the rest of the year or next year. So it's never a dull moment when you talk about interest rates.
Yeah, no, thanks, Greg. And I can't agree with you more for that predictability and being consistent, right? And everybody likes that because you can plan more effectively, right? And I do. So on the next slide, some of the key if factors influencing 2026 is kind of aggregate of everything. Lower mortgage rates, yeah, I don't. It could be slightly lower, right? Stable but moderate home purchases. Okay, so that means it's kind of flat there. Kind of look at the economic growth slowed, but who knows, right? Those are the things that kind of out of our control, but they do affect our market. And then as we talked about, increased refinance activity, and it's to be probably the higher percentage of the drivers for the increased origination volume. So some of the other economic factors we go into that, is employment rates. So let's look at employment rates and how maybe that's looking, right? The more people have jobs and have wages, the more they can afford a home and help kind of drive some of the origination. So on this slide, Greg, we have some of the employment that the trend doesn't as we're going into the end of 2025 and start 2026, and we still have the report coming out tomorrow, right? So if maybe you have some comments regarding that.
Absolutely. So the jobs report comes out for December, comes out tomorrow. And this is really kind of the full, the first real 30-day report we've had in probably 4 months, right? Because due to the government shutdown, we weren't necessarily getting a full slate of accurate data because the pause in the government. So this will be interesting to see, what comes out tomorrow in regards to the jobs, and hopefully, like you said, people, a stable economy with people with stable employment makes people feel more confident, and therefore, willing to get into the housing market. So hopefully, we'll have a positive report tomorrow that'll help the Fed feel comfortable about, lowering rates a little bit potentially, and probably set the stage for the rest of the year.
Yeah, I'm hoping so. There's two mandates that the Feds have. One is the employment, and then we'll go look at the next chart, and that's inflation, trying to manage both those at the same time for full employment and the 2% is what their target is for annualized inflation. And so you can see where I think this is a main factor. We lower rates. They did a lot of government spending that caused some inflation in a lot of categories, maybe some policies and regulations they put in. It's not I could put it up, it's just what it is. Drove some costs of everything across the board of the last 3 or 4 years, right? And then you look at homeowners insurance. Remember, we look at a component of affordability, and a lot of the news is just on rates, right, Greg? And I'm looking at no, there's other things that go into the affordability that people should consider in their housing decisions, right? And this is just one of them, insurance, Greg, but I think there's others too. Maybe you can talk a little about the homeowners insurance and we got some personal friends and know people that have struggled with this of getting a cancellation notice, so to speak, right?
Absolutely. The homeowners insurance slide is really eye-opening. Homeowners insurance when you're buying a property, the insurance used to be an afterthought. It used to be kind of a nominal amount of money. It was a component of your payment, but it didn't really affect whether you were going to, buy a home or not per se. It's staggering to think that you go from 2019 up to 2024. There's been a 40% increase, and that's if you can get insurance. Certain areas it's harder to get insurance, and you're just going to get cancellations, as you mentioned. Areas that are affected by fire. Certainly in California, we see a lot of that where people can't get insurance. They're simply canceled, and they have to go to a state-run program that's significantly more expensive. Same thing in Florida. You can't get insurance. I mean, that's a big deal now as far as really goes into your thought process as far as buying a home where, 10 years ago, again, it was just kind of an afterthought. You knew you had to have homeowners insurance, but it didn't really affect your decision in regards to buying a home or not, as far as how much the homeowners insurance is. And now it does. And that's just the changing times.
It is a real factor. I live in Northern California, and there's certain areas where you cannot get insurance. I mean, you got, especially get up towards the Sierras, very difficult because of the fire hazards and some of the things they've had. So they're real issues in certain areas of the country. So other factors included, right? So I just look at just the cost of electricity bill goes in. You got a bigger house that might not have the updates that you need for energy efficiency. All those things should, are considerations of affordability. All right, so let's look at housing inventory real quick, right? So I've always said, hey, we need more homes on the market. And I'm a believer we need more affordable homes in the market, but just kind of give you an idea of what the housing inventory list count is. And if you go across this, obviously it was low in 21, 22, then it started increasing, right? So it's about the area of right before before the pandemic, right? And so that is out there. And we also seen some articles where there's like this record number of sellers pulling or delisting their house. So
Yeah.
I think there is some demand that people will want to move. And it's just a matter of when all this stuff is going to happen. And hopefully it's more on the slow side. You never want to see a big movement on it. You kind of want to see it gradually go, so you don't want any distortions in it. But what do you think, Greg? As far as the housing inventory, and I think it's more in the starter home area, but
Absolutely. The starter homes are really where people enter the housing market, right? In regards to they get their first home, they live in it 5 or 6 years, they need to upgrade, they need to move up in regards to the size, their family's growing, whatever the circumstances are. But there's the starter home isn't available, just unfortunately due to the fact of what the previous interest rates were in 2021 and 22. As far as it's locking people into the houses where they can't necessarily sell the house or downgrade and have their payment go down, correspondingly. Payments in a lot of cases end up going up when you downgrade. So that's why people aren't moving. We need to get to the point where people are comfortable and they can sell their starter home to usher in a new generation of people buying homes. So that's really an impediment of the market right now that we're, hopefully we'll start to move, throughout this year as far as people will sell homes, release some of that equity, and allow other people to get into the market and just kind of get back to the normal way of how the housing market has previously worked.
yep. All right. So the next slide, just some little thing is I do got to want to talk about the rental market, because a big portion of loans done today are in the investment category, and you got to look at how rents are coming in the rental market. And the first thing stood out to me, Greg, was $2,000 a month.
Oh, yeah.
Oh my goodness, right? And that might be, if it does go up, I mean, that gives opportunities to kind of do the side-by-side comparison. Should you be buying a house versus renting? And then for those investing in investment properties for rental income, need to look at that too. And again, look in your neighborhoods, in your communities you're at, because it could be different, but this is a national flair of where it's at and the available rents that are available right now.
Yeah, $2,000 is staggering. I mean, I'd still be at my parents' house, right? I had to pay $2,000 when I first moved out. My goodness, that's crazy to think. And to your point, it ends up being, that's the analysis. Does it make more sense to rent? As a landlord, people invest in rental properties. You're excited to see that figure. Entering into the home buyer's market, you might want to wait a little bit if that comes down or the home prices come down. So, but information is power, right? It's important to understand what's out there, what you're working with, so you can be an advisor or consultant to your clients, so they know what they're working with. So it's great information, whether you like it or not. It's still what's out there as far as the information goes.
Yep. All right. Now, we're giving you a lot of data here that hopefully you can use, but this is the slide I was talking about is existing home sales versus 30-year fixed mortgage rates. This is where I tend to look at if rates stay kind of where they're at, maybe a slight down, they will increase some. But man, I'm looking at this probably, existing home sales is going to be kind of flat unless we have some different things, or there's legitimate need to move to a smaller home, downsize, job movement, those type of things. And this is where I'm looking at, and it's just a trend, and you got to look in your area for a more precise thing. So you need to look at what's happening in my area, because this is a national level that kind of averages it all together, Greg. So I don't know if you got comments on this here.
Yeah, this is really kind of the elephant in the room. The housing market needs to release some of the starter homes, as I mentioned before, in order to usher in another group, and those people move up to buy the next level of home, and so on and so forth. But it's interesting to see. This really is inventory. It remains the challenge in the housing market, and if people start selling their homes, willing to give up the 2.5%-3% interest rates, it's going to be a huge paradigm shift in the market. Hopefully, again, gets us back to more of a normalized cycle, and where people are buying and selling homes.
Yeah. The next one just kind of reinforces that. This is an article, by Redfin out here of the lowest turnover in modern records, Greg. And I was looking at this. Yeah, it's right. I mean, it just what happens in this when you have an affordability to get into a home, right? And you have those that have existing homes that, it doesn't make economic sense to sell, right? And hopefully that gets freed up this year a little bit as we start seeing that.
Yeah.
I don't know, Greg, what do you think on this?
Yeah, again, it's pretty staggering information as far as how it's the lowest level since 1995 as far as home sales. Right, people are just staying in their homes; they're not moving, and that needs to change. Hopefully, as the interest rates get better and start to go down, or their dips, there's an opportunity for people to sell their homes, move into something else. That'll release the inventory, and again, put us down a different path.
Yep. Okay, so on this, everybody's got opinion it's going to go up. I actually agree it's going to go up slightly. It's not going to be some monstrous improvement in mortgage volume. However, that could change. All of a sudden, rates get into 5%, the low fives. That is going to change the dynamics completely. And we should be prepared for that. We need to know, okay, this is the trend, but how do I prepare that based on your own analysis, right? I always believe you do your research analysis. This is just some tools for you because your community is probably different than the national average, right? But I start right here, and the first was update knowledge. And Greg, you're talking to me about the loan limit increase, right?
Right.
For some of the government agency loans, right? So I think that could help out.
Absolutely. So, I mean, we were looking it up. The new Fannie Mae limit for high balance in those particular MSAs is up to 1,000,002, which is crazy to think. I mean, where it was $625,000 5 or 6 years ago, it's gone up significantly. So it's really important to make sure you understand, everything that's available to you and your clients. As with fewer transactions, you want to make sure you're doing a service to your clients and your referral partners to know about the Fannie, new limits, FHA, VA, non-QM especially. You want to make sure you understand what's available to the clients because it's a service. We're consultants. It's a value add as far as the people that you work with. And the more you're up to date on everything and sharpen your skills and understand what's available, it's just going to help everybody involved. So it's important to make sure you review it and you stay up to date on this stuff. Loan limits, programs available, because you just never know. Things change, and this is going to, possibly turn something that you didn't think was available to a client in regards to a loan into putting them into a home, which is amazing.
Yeah, no, thanks for great. And that one thing, structure skills. I know at Home Express, if you want some tailored training on our programs or anything like that, just reach out to us. We do this all the time, and it could be on, what we see in our growth, different programs. We're here to help you, maybe to find some of non-QM borrowers. Just let us know, and maybe you have a group there that would want access to someone to kind of go over that to make sharpen the knowledge of what's available out there. We're here to help you with that.
Mhm.
Some other best practices we have here would be Re-engage your database, I'm telling you, this is what I call the fundamentals, right? Of like what you need to do every day. And I'm sure a lot of you do it because you're in this business today and you've made it, right? And you're sticking through it, even though the transactions have gone down nationally, but you're in it, you're sticking through it, right? And so these probably things you do is like, deepen your expertise, sharpen your skills. You re-engage on the next slide, Albert. We have like where you re-engage your database. So what do you do if it's a little bit slower, right? So um, referral partners, and then provide exceptional service.
Yeah, Mr. Grider, your sound changed.
Oh, did?
Oh, there we go. Now
Okay.
it's back.
All right.
There
I
we
don't know.
go.
Maybe it did. Sorry.
You got to plug it back in.
Yeah.
No, I was plugged in. All right. Sorry about
Need
I was
that.
like, sounds like he's talking underwater.
Oh,
Need an
geez, I'm
answer.
sorry. It
okay,
was
sir.
That dial-up you have up there, Dave.
yeah, that's it. That's right. Yeah, remember all that dial up, how technology has changed, right? Well, once you take this slide, Greg, we'll talk, the next couple here talking about, some of these best practices. And I know you talk a lot about this within your division.
Absolutely, thanks. So yeah, re-engage your database. We talked about it earlier as far as the MLOs being still in the market. Make sure you let everybody know that you're still in business. I mean, is that might not seem as something that jumps to the front of your mind, but people leave our industry. Obviously, over a 3-year period, 400,000 people left the mortgage business. It's important to let people know you're still around. Talk to your referral partners as far as deepening that relationship. Exceptional service is absolutely a critical component. And you want to think outside the box. If you are in a particular area in regards to mortgage lending that might be a little slower, less transactions, maybe you look to add some licenses. Maybe you look to go into some different states as far as availability, which would be terrific, right? January is always a time to kind of rethink your business plan, rethink different ways to grow your business. And all those things should be on the table in regards to how do you expand your business? How do you go to the next level as far as your offerings are concerned? There you go. So refining your systems, your workflows, taking advantage of technology. AI is amazing as far as different ways to think about growing your business. Maybe you type in a Copilot or AI. How do I grow my mortgage business? It's the simple things. It's amazing what type of answers or ideas you might get back. I mean, you're getting a lot of information today, and that's if you come away with a couple different nuggets as far as how to rethink things. Then it was worth the time to sit here and listen to us. But optimize your workspace, make sure you're disciplined, make sure you're organized, and make sure you're. I'm a big fan of you setting up a schedule, right? Detailed weekly or monthly time blocking. I'm a big fan of time blocking, and the discipline is critically important, right? You have to, whatever path you go down, whatever plan you implement, you have to make sure you stick to it. It has to be a daily activity. It can't be haphazard. It needs to be on an everyday experience, and that's how you get the type of returns you're looking for. You have to put the work in every single day, treat it as a full-time job, and absolutely the benefits will start to come.
I agree so much. Yeah, man. Treat it like a job. I know we're all commission-based, Greg, most of us in our industry. And I mean, you got to make sure you set the times and treat it like a job, right? Especially during the slower times. It's so easy not to do that, right?
Oh, no question. Yeah. Again, stay focused, stay disciplined. That's what you need to do on a daily basis for success. It can't be random. Hope is not a strategy. It needs to be something that's done on a daily, weekly basis. And that's how you grow your business, and that's how you continue to excel.
Awesome. Okay.
Mr.
Albert.
Grider, we,
Yes.
we're talking about all these things changing, right? The market, the rates, best practices and so on. But, we know that, the people come to us because they know that non-QM is really our bread and butter, right? And what do you think if we ask the masses and see what they think about, the volume and the percentage of it for this upcoming year? What say you, Mr. Grider?
I do. I think we should. Let's ask them, see what they think about the non-QM market for 2026 as a percentage.
So, from a business perspective, what percentage of the overall mortgage market is expected to be non-QM in 2026? What say you? Do you think that it's 2%, 5% or 10%. So what do you
Wow.
think, Mr. Grider? What are your thoughts?
Well, I'm going to wait here, right? Because I'm in the field, kind of study all this stuff, and it's something that someone told me the other day in our business. That's his executive type. And he goes, non-QM volume in 2025 was about the same as the VA market. I go, wow.
Wow,
Think about that, right? As
that's
we're going in
significant.
there. That's a big segment, a growing segment. So historically, it's from non-QM, and I've been in non-QM business since 2015, over 10 years, right? It's the highest level of participation from our partners out there, from the mortgage network, mortgage bankers, and from the borrowers that have needs like that non-QM fulfills. Be interesting to see what that number is. What is it, Albert?
The masses say 10%.
Oh,
It
10%.
is, right? So yeah, so that's what it's expected to be, 10%. But we got a sharp group on the call today, right? That
It,
sharp group.
we do, Mr. Grider.
But when you think about that, are you prepared, right? And I'm not this type of webinar is not to go in a deep dive in all these programs, but this is the biggest percentage is we help the self-employed borrowers. We help those that might have, the income doesn't fit the traditional way to underwrite it, right, through the agency guidelines, and the small to medium investors continue to help them. When this is kind of what we see. This is probably 75% of the volume in the non-QM space are these two categories.
Yep.
So we'll kind of look at some of the programs. I'm going to go fairly quick through these things that we do. So on the next few slides, Albert, we'll kind of go through those. We're coming up to a half hour. Uh, my voice gone again?
No, you're
All
still with
right, great. All right. So, and again, the programs are the personal 100%. And here's really what you need to know, right? You kind of know these programs out there. There's lots of webinars, lots of material on there. Really get yourself connected to a really great experienced account executive, and they're going to walk you through this. The technology has really developed over this to make it very much very convenient and the speed of execution of getting answers on bank statements, what income can you use. Off the charts from what was 10 years ago. That was all manual. And we have a portal system. You can upload this and you can do it before you submit the loan so you kind of know what it is or go out and purchase. So just want to show those things with you. Then on the next slide, we're going to have some of the investor products we have. And everybody goes, hey, DSCR is way to go. But you can do income docs on those, you're right. And we have some really streamlined guidelines to help your small to medium investor. And I think, Greg, you talked a little bit about that is like as you go into 2026, maybe you're in an area that the volume has gone down a little bit
Yep.
and explore out. But there's states where you don't need a license for the business purpose, right? So you can look at here on the dark blue is states that do not require NMLS license that you can market to.
Right, which is pretty easy to put in place, right? You don't need to take a test. They don't require the license for that type of loan.
Correct. Then we go to some expanded programs that we have out there. We introduced. This is about 60 days ago. About that, right, Greg? When we've already funding a few of these deals that have come in on the 5 to 8 unit DSCR program. Right, so kind of look at that. And this last year, we introduced non-delegated correspondent and got great feedback from some of those clients that decided to go that way. So if you're in an office right now that you have non-delegated and they're kind of pushing that way and understand the benefits of it, where the doc's in your name and you have more flexibility in pricing, reach out to me and you're going to see a couple pages here. Love to connect with you and kind of go over that program with you. And there's no carve outs. That's probably the biggest thing. You keep your AE, right? That's going to help you out, structure and go through the programs with you. And it's just a great. So you have the same programs that you have and your own delegated team. So very, very much, if that's kind of what channel that you're thinking about, we'd love to connect with you.
Yeah, a growing segment of the company. I mean, certainly a lot of opportunity.
All right. So with that, Albert, hopefully we got a lot of questions, and it could be on anything, could be on programs, industry. And again, it's my opinion. I'm not a company spokesman. I am just kind of one that studies our market and kind of involved in it, just like you guys are, and maybe a different perspective. But it could be on guidelines, anything that you want to ask me.
Yeah, Mr. Grider. So we do have a question here, and it says, what is the best way to maximize the loan pipeline you already have?
Great question. You know what? I'm going to have Greg answer that. Greg actually trains all our staff on pipeline management and how to do that, how to set up times and go through that to kind of move that. So, Greg, I'll have you answer that because you do a great job training our staff on how to manage pipelines.
I mean, thanks, Dave. In regards to pipeline management, I really am a big believer in it's the level of engagement, right? It's critically important that an LO works hand in hand with their operations staff in regards to pushing the file forward. In regards to conditions from the borrower, working with title escrow. You have to have a plan, division of labor, set some timelines in regards to when things are supposed to come back. And the loans have a tendency to close smoother, right? You understand when the close of escrow dates are, the contingency dates, you timeline all that, you kind of reverse engineer and when you need the critical items back from the borrower, and the files they move through the system at a much more predictable pace. Files close on time, you earn additional referral business, and it's kind of a rinse and repeat. So
Yeah.
involvement is the true key.
It is. I'll add just one thing in there. And usually there's two or three conditions that matter the most on a loan, right? We know the appraisal's one, but maybe it's an income. Maybe it's something else you need. You knock those out early, and
Yep.
then it gets smoother down the road. Don't wait till, hey, it's in there. I got this one last condition, and I know it's a tough one. If it is tough, address it up earlier. And especially with us, we got flexibility. We want to make every loan that you provide to us, we want to make sure that goes through. And the earlier you give it to us, the more opportunities we have because we're a true lender. We underwrite to our own guidelines. We can make exceptions. We do it all internally here. Let us know what that is. So give us your scenarios. And if you see something on there, let's get that addressed early and bring it up to us.
We have another question here in the chat. It says, how will the new presidential proposal affect investor non-QM loans?
Don't know. I think it's too new to rate. I think
That's
there's a lot of talk on what they're going to do. I think maybe they're relating that to I guess the bigger hedge funds, those like Blackstone or some of these other companies buying, not being allowed to buy blocks of homes anymore. I think that's probably what it is about. I mean, there's two angles to go on this. One is if I own a home, why can't I sell it to the highest bidder? Okay, that's one. And the other thing is having the first time home buyer age at 40 now, I don't think it's good for our country.
yeah.
So I got these two dynamics going on. So I'm thinking that's more of what that question's about. It- and I think there's some things that you got to look at. So sometimes there's unintended consequences for decisions and things that go on, right? What I'd like to do is have the government not have such a debt load, so we have more consistency. You don't see the inflation, and you have things go there. But obviously, buying a whole block of homes, of starter homes, and you're stuck renting is probably not the way to go either. But I know that that equalizes out too, right? That more homes will be built and that. So I think it's too new to rate.
We have a question or in the chat, and it says, I recently joined APMC. Are we currently signed up with Home Express?
American Pacific, yes.
Absolutely.
Uh-huh.
Great.
Yes.
So
Know them very well, especially I'm up in Northern California, the office there in Roseville.
Angelus, if you're not sure, who wrote the question, Angelus, if you're not sure on who your account executive is, here is the information for Mr. Grider. You can definitely either email him or call him directly, and we'll make sure that we have an account executive reach out to you today. John is asking, do we have foreign national programs?
We
Absolutely.
do, right? So that's kind of a wide array of like, what do you mean by foreign national? So I go and you look at a foreign national, that just means they're not a U.S. citizen. And so I break it down into a permanent resident alien. Okay, perfect. A green card holder. Then you have non-permanent resident alien. Those are individuals here. They're not U.S. citizens, but they're here on the terms of the visa. Those are okay too. And then what we have a category of foreign nationals, what we call foreign nationals, even though there are, those are individuals that live and work, non-U.S. citizens outside the U.S. And we allow those too on the investor program, right? So, and we can go through a lot of details, but yes, we do. We do quite a bit of those, to be honest with you, right? People from Canada want to buy a home here, Europe. We see that in other parts of the country that want to take part of their portfolio, move to American real estate.
Yeah, and it looks like Angelus just wanted to reiterate again, American Portfolio Mortgage Corporation. That's APMC.
Oh, American. Okay.
Oh, okay.
Don't know. We'll find out. Just kind of, reach out to me on that and I'll look that up.
Absolutely. We'll make sure to get you signed up if you're not. Question comes up and it says, how can I deepen relationships with referral partners?
Great question, right? Um, Yeah, I know there's two factors, but it's slow. I mean, how involved are you as like on that? So you got referral partners. I mean, how often do you meet with them? Do you talk about, do you know them personally and kind of just engage with them? I believe in reciprocity, meaning that hey, the more you help them, the more they help you, right? So if you look at deep in that is like that the connections, like you helping them on their business. I believe in helping and kind of serving others, right? And that's it. How can you think of ideas to help your referral partner grow their business? You do that and you help them grow. You now got a great relationship that will work. I don't know if Greg, you have some ideas on that as well.
Absolutely. So, I mean, information is powerful. The more you can bring to the table in regards to, again, helping them grow their business and educating them when they're talking to their clients is going to be helpful. I mean, I think a lot of people would be surprised in regards to lending for as far as real estate agents that don't really have a real grasp as far as what's available to them in regards to the programs. And the more you educate them and give them so they have a better idea of what they're working with when they're talking to their clients, it's just going to help them get more clients, and therefore, it should in turn help you get more clients. So the more engagement you have, the more you bring to the table as far as being a subject matter expert and giving them nuggets in which to share with their clients. It's going to be helpful, and again, it'll come full circle in regards to more referrals for you and more referrals for them.
We have one final question here, and it says, and this I think this is a great one. It says, "What is the best way to invest in marketing instead of cutting it?"
Wow, great. Okay, so I'll do this. I'll let Greg also respond. And I've done this once. So we're in the world of technology, information being online. It's just a matter of what it is, right? So I look at it and go, do you have some social media, some contacts? So if you look at, why does Homes.com get a lot of hits? Why they spend the money on internet and Google ads and all that. I'm not saying do that. I think you can do it really inexpensively within your community, right? And I'll give you examples. Like my wife, we got the Ring camera. A lot of people have that. They have a little community on that. You would not believe how many people ask questions on that community in our area of great restaurants. You've been there. You need some help. I mean, just the little things to grow your marketing base at a very low cost of being involved in different platforms is great. But I think you have to have a social media platform today. I think you have to have some type of internet of that. I look at how you take applications today. Most of that's done through the internet. Click the link here, fill your application. It has changed from 10, 15 years ago when you're doing it more face to face, right? So I don't know, Greg, maybe you got some comments on that.
Yeah, I mean, I'm very similar to what you're saying. I think social media is the least expensive way to get out there. But again, you have to do it on a regular basis. If you're haphazard in your approach, you're not going to get much of a return. If you do it on a consistent basis, you have a consistent schedule, whether it be, Facebook or Instagram or LinkedIn or any other type of platform as far as how you engage or interact with people. Do it on a consistent basis. Let people know that you're out there and there to help. sharing information, just little tidbits as far as little small little forums. I think it'll pay you dividends in regards to the effort you put into it. But the consistency is always the key. People do it for a little while, they don't get the return or they don't get the instant gratification, and they stop doing it. I mean, these things take a while. You're all franchisees of your own business, and it's a matter of putting the time in, building your brand, and you'll start to get more. You'll start to get more feedback.
Yeah, no, thanks, Greg. The small things. I think the consistency. I've said it along. It's like it's tough, and I look at this, and I've done, some research of how does the LO start out in the business, and then kind of make it part of theirs, and the whole goal is to get to probably 50 good clients, and then all of a sudden it just grows from there because you have a sphere of influence. If you look at it, you got your first degree. How many people does your one client you just close know? It's kind of a question. Do you ask for, hey, can you give me some referrals? And it just kind of expands and expands. And now who do they know? And you just kind of grow over time where, man, you have a pretty good sphere of influence, but you have to keep that data and you have to keep engaged and you have to make that part of your daily, weekly activities you do to keep that going in where you're engaged with them. Then give them something that's important to them, something that is information. Some of the stuff we provide you is like you can provide this to some of your real estate partners, right? Hey, investor programs, this is it. The refinances are out. Or, hey, the self-employed, hey, real estate, if you have a self-employed borrower, may not fit your, I have expertise available. I've been trained on this. I know how to do it to help you close that purchase agreement. So all these different things you kind of reach out to, you're identifying yourself and you're distinguishing yourself from others. And I think that is key based on your consistency, your knowledge, and how you do things.
Awesome. Thank you for that, Mr. Greider. And we do want to close this out a little different with the next webinar, right? So we did want to ask the masses, right? Hey, what would you like to see from us next, right? So, I mean, we're always trying to think of different topics, things that are interesting, things that are of value to you as a partner with us here at Home Express. And that's ultimately what we want, right? We want to provide our expertise, our knowledge, our know-how, the products that we have available, but we certainly want to be a partner to you, right? So with that being said, what would you like to see for, for our next webinar? Would you like to see maybe income and DSCR calculations? Would you prefer to see how to capitalize in the purchase market? Would you prefer to see non-QM made simple at Home Express, which we're certainly experts at, right? Or, do you have other? And if so, type in the comments and let us know. That's the suggestion box. So what say you? We kind of wanted to
Yeah.
hear and, see what kind of topics interest you.
See, this is so appropriate, so Albert. So thanks for this poll. I looked at some of my personal goals and for our company, all our partners, I'd like to help them do 20% more in volume in 2026 than 2025. And that's actually a personal goal that I have that I wrote down. How can I bring a value? Well, part of this is let me know how we can provide that for you and maybe some topics that you guys could utilize and help you grow in 2026.
The masses have spoken, and they would like to see non-QM made simple at Home
Okay.
Express.
All right.
Okay, we got our
Uh,
new topic. So thank
we,
you. Right. So
we shall
yeah.
deliver.
Yeah, so I mean, thank you guys for attending, and I think it's more of a thank you for your persistency and your consistency. You already have great attributes on it because you're in it. You're in it with some times where you saw where it's got transactions that aren't like it historically was, and you're out there trying to help customers, right? And borrowers and families get to some of their family goals achieved, whether it's refinance and getting the cash out for college tuition. Whether it's buying the new house, they got a new child, they need to expand. All the things you do make a difference in people's lives. And I can't thank you enough for your effort in doing that.
Yep.
We do have a couple comments that came in, right now, and I just wanted to make sure that I cover them. Angelus just saying that, thank you that, now she knows. Uh, Robert saying, I love the market trends and new products that you offer. Maybe highlight and talk a little bit about the new products. Great. We can definitely
Yeah,
include that in
we
our-
got to add that into the next webinar. So we'll put that down. So I've made simple also some highlights of the new programs.
Perfect. And yeah, Angeles looks like Florida Foreign National DSCR. Okay, that's good. And then Christian is saying thank you. Okay, Mr. Fairman, do you have any closing words for us, sir?
No, I appreciate everybody joining. Half the battle is just showing up. So the fact that you're still in the business, you take the time to try to learn a couple things. If you came away with a couple of nuggets, fantastic. We're just trying to put out some information that you can share with your partners and help grow your business. But we absolutely appreciate your partnership and business, and look forward to a prosperous 26.
And as always, we will make a copy of this, not only of the deck that we've gone over, but also a copy of this recording will be made available to you. We thank you again for your participation, and we'll see you in the next one. Bye, everybody.
Thank you.